Whole life insurance is one of the most controversial products in personal finance. Some financial advisors say it's a waste of money. Others swear by it. So who's right? Well, the honest answer is it depends on who you are and what you need. Let me explain what whole life actually is. Whole life insurance is permanent life insurance. Unlike term, which covers you for a set number of years, whole life covers you for your entire life. As long as you pay your premiums, the policy stays active and will pay out a death benefit no matter when you pass away, whether that's at age 50 or 95. Your premiums are fixed and guaranteed to never increase. And here's the part that makes whole life unique. It has a cash value component. A portion of every premium payment goes into a savings-like account inside the policy. That cash value grows over time at a fixed guaranteed rate. And the best part, that growth is tax deferred, meaning you don't pay taxes on the gains while they stay in the policy. Let me spend a moment on cash value because it's the feature that generates the most questions. Think of it as a savings account embedded inside your policy. Each year, it grows at a rate guaranteed by the company. Over time, you can borrow against it, use it for premiums, or even surrender it for cash. Some people view this as a conservative, tax-advantaged savings vehicle, but here's the important caveat that most people miss. Cash value builds slowly. In the first several years, most of your premium goes toward the insurance cost and the company's expenses. It typically takes 10 or more years to become meaningful. And remember, any loans you take against it will reduce the death benefit if they're not repaid. It's a tool, but one you have to use carefully. Now let's talk about cost, because this is where the conversation gets real. A healthy 30-year-old might pay $350 to $450 a month for whole life. That same person could get $1 million of 20-year term coverage for just $25 to $35 a month. That's a massive difference. That's roughly 10 to 15 times more for whole life. Some of that extra cost is buying you the cash value and the lifetime guarantee. But you need to ask, is that worth it for my situation? For most young families who need maximum coverage on a budget, term gives you far more protection per dollar. Whole life isn't for everyone, but it does make more sense in specific situations. Let's look at who those people actually are. First, people who need estate planning tools. If your estate is large enough to face taxes, whole life can provide liquidity so your heirs don't have to sell assets. Second, parents of a special, needs dependent who will need lifelong support. Whole life guarantees the money will be there no matter when you pass. Third, high-income earners who have already maxed out their 401k, IRA, and every other tax-advantaged account and want one more growth vehicle. And fourth, anyone who wants the absolute certainty of a guaranteed payout, guaranteed premiums, and guaranteed cash value for the long haul. To learn more or see if whole life makes sense for you, visit lifeinsure.com/wholelifeinsurance or call 866-868-0099 to talk to an independent agent today.